still have my guest with me in studio here, Bismarck Rewale, the CEO of Financial Derivatives, and Nnamdi Wizu, the co-managing partner at Commercial Partners. Quite a lot to address here, Bismarck. Let's talk about the decision made today. Quite a lot of adjustments made here, but let me get your take, your initial take.
I think it was quite aggressive and bold, right? So 50 basis points is anticipating that the US will cut again before the next meeting. So if the US cuts again, that was another 25. So the asymmetry between US interest rates and inflation will come into bear. Secondly, it was very clear in his mind that he's watching liquidity. He's watching the stability of the banking system, and also that the recapitalization of the banks is not even a subject of discretion anymore. It's going to be done. So generally speaking, I think it was a good meeting. The decisions were aggressive, and we thought that we would do something less and then more later. But since the numbers came out, the GDP numbers, inflation numbers, so it gave them enough confidence to do what they had to do, and I think that was good.
Only you called this one 50 basis points, like you rightly did. But another key thing that came out here is that focus on the public sector, liquidity management in the public sector. And let me get your take on that as well.
I mean, it's interesting because, what they said was non-TSA. So the first thing is what would qualify as non-TSA. Typically, it would be FAC, and then I think also NMPC funds. I know they used to have a lot of funds with the banks.
Yes.
But I also know that, sorry?
Yeah.
Yeah, I also know that quite a lot of that has been taken out of the system over the last couple of years by government/central banks. A lot of NMPC funds were actually withdrawn from the system. So I think focus might just be FAC. We always had that cycle where every month you have liquidity coming in from FAC. There have been some theories around, why don't you give them dollars instead? And then when they want the Naira, they should go and exchange the Naira with the bank. So you don't have additional Naira liquidity coming to the system. So I guess this is almost a way of sort of trying to sterilize it. It will be interesting to see how they implement. We know that they were subject to the 50% CRR before. But now that they've said special, then it means that you might have a different special administration. So possibility you debit from source before the money comes into the system. So only 25% hits the system. And but what that also means is that if the state governments do spend the funds, right, because it means they will still be credited to the bank, then they would have to refund that monies back into the system. The dynamics will change. A lot of state governments we know take OD facilities ahead of FAC. You have some who have ISPOs that are already been issued based on that money's funds coming in. So it'll be interesting to see the dynamics, how it will play out, but definitely a way to sort of sterilize that constant monthly inflow that comes in, and the central bank has to issue OMO bills to take out liquidity month in, month out. So I guess they're looking for another way to sort of sterilize it without having to pay so much for it.
Yeah, because we were talking about that just before we started the show, and let's get into that because still liquidity is still the topic here. This time, not the public sector. We're coming to the banks now. You talked about that excess build-up in liquidity in the banks. Bismarck, your take on that as well?
No, I think what the governor is saying is trying to delink liquidity from inflation because they've mopped up a lot of liquidity, and therefore it is not the mopping up of liquidity that has led to the reduction in inflation. It's more the exchange rate that appreciated, and also the reduction in the price of PMS. Those two items are more potent for bringing down inflation rather than liquidity, because liquidity is not income. So I think he's trying to segregate that, and people have said that if the central bank, or if the banks are not recycling the money, then there will be no economic activity. So he has done to bring the CRR down from 50 to 45, left that of merchant banks where they are, and also begin to say, let us delink liquidity in the banking system from consumer price inflation.
But for you, though, still on you, Bismarck, what would you say was the key signaling ahead of the next meeting, from the meeting today?
Key signaling for the next meeting is that we are going to keep our eyes on the exchange rate and the gross external reserves. If we see any movement, any negative movement, then we would intervene. We don't have to wait for another meeting. We will intervene. I think that's the message I got. But keep all eyes are open to ensure that nothing goes awry.
Namdi as well, key message for you?
Yeah, I think basically the same thing. I agree. You'll have to keep an eye on, what happens over the next couple of months before the next meeting. If you ask me, I would expect maybe another symbolic cut at the next meeting. Well, a lot depends on, the impact they see from what they've just done, because it's quite a bit aggressive, right? And I mean, people will say it's a bit overdue once again. Earlier I said, if you look at what they've done in other African countries, Ghana, Egypt, and co., it's about time we also started to try and, tweak it. And I'm sure Central Bank will also be looking at what the effect on inflation, high interest rate, because high interest rate also has its own impact on inflation. So at a point in time, they themselves have to start saying, look, rates have, things have normalized, exchange rates seem stable, Naira is appreciating. Now, what impact, or what contribution does high interest rates have to inflation? And is it time to also start looking at the way to moderate that, to also reduce that inflationary impact that you would get from high interest rate environment?
Yeah, because quite a lot played out there today. Bismarck, your assessment was as well on the adjustment on the asymmetric corridor.
I don't think that is too much of a problem, right? But the real thing is that normally when you reduce interest rates, your currency weakens. So 50 basis points means that, technically speaking, the currency will weaken. Will it weaken to a point where it will actually destabilize the rate of accretion of the reserves? No, we'll see that over the next 2 to 3 weeks. If the exchange rate, the parallel market rate begins to depreciate because there's excess liquidity coming to the system, then the central bank will have no choice but to do some things mop up. So they've left everything, all options on the table, so they can do things to stabilize the exchange rate. The exchange rate is the key element.
Let's get to the banks now. 14 banks have met the recapitalization. And your take on what we're seeing playing out there. He talked about the forbearance, the successful termination of the forbearance for the banks as well, and how that impact is transitory.
Yeah, so, we know that you're going to see a lot of the banks brought out statements saying that, look, they've had conversations and that they're going to clear a lot of those loans by, I think it was end of June or so.
Yeah.
So I assume some have hit, but if you look at some of the banks, you see that some of them took a huge hit also. So it's possible that either central bank didn't sign off on, the agreements they had, but they still have some fine-tuning to do. So if they do claw back those funds, right, from the major debtor, which we believe there's a major debtor in the system, then that means they might start to see that reflect in their results going forward. Q3, Q4 results. Even if they don't, you're not going to have another hit again. So that's a one-off. Which might be why, part of the reasons why they also had the increase in capital. So increase your capital, we're going to do this, we're going to debit you, we're going to take money out. So increase your capital, so when we debit you, you don't feel the pain too much. The really interesting part will be what happens if some banks don't meet it. Are we going to start to see measures happen before end of the year? It will be interesting. Are they going to ask some of the big banks to acquire some of the smaller banks, or will central bank take over the banks that don't meet it? Because one thing I can say about the central bank governor, if he says something, he's going to keep to it. So if I said there's no
exception of the forbearance.
Yeah, there's no exception. That means come deadline day, he's going to wield this big stick, and nobody is going to be able to convince him not to. Right, that's the impression I get from him. So you're going to see a lot of moving parts from now until the deadline date, and then you'd also have to start asking yourself what happens then, who survives, who doesn't, and how does it play out.
Let's get to the other part about the collaboration between monetary and fiscal authorities and how they are managing the economy. I'd love to get your take on his response there to the question.
One thing that I saw, which, even though he didn't mention it, a reduction in 50 basis points means that if you take a total debt of maybe 200 trillion, or 50 basis points reduction means debt service burden of the fiscal authorities reduces, debt service burden of the monetary policy authorities also reduces. And that's a significant let-up. And so that means rather than pay money to people, investors, they're keeping that money for other things to do. So I think that is the beginning of the coordination. The second part is that ensuring that the recycled funds are properly deployed rather than just being with the leakages and all that. That is where the 75% non-TSA comes in. So you grab that, you reduce the interest rate burden, and all told, the federal government, the Federal Ministry of Finance and the Ministry of Investment and the tax authorities will work together to ensure that they can get things done.
Yeah. All right, then on the reserves, Nnamdi, your take on what he said and what we're expecting down the line.
It's good answer. Well, the central bank will keep an eye on it. Whatever we were doing before to ensure that reserves, they had the uptick in reserves, we will continue to do. So I guess you might start to see them possibly issuing OMO or going into some sort of swaps to try and bring in additional liquidity in the system while they're waiting for the fiscal side to really start generating enough, funds. Because if the fiscal side really starts to generate enough, then you can start to let the FPIs gradually go and replace it with funds that you get from the fiscal side. Right? That would be, a big aim or the big aim. Because if not, if you allow all the money go out, then you're back to where you started and you come under huge pressure. So you have to find a way to balancing act, and they need to find a way to try and balance that.
Well, the fiscal revenues are domestic revenues.
Yeah.
The FPI revenues are international revenues. So you cannot substitute one with the other.
Yeah.
You need to understand that the foreign exchange that comes in through the FPIs, you need that to keep the currency at that level and the reserves at that level. And therefore, I think they'll be watching it to ensure that
because we started with the scorecard around the 2 years of the governor and what the reforms have brought forward. Now let's look at what the next 2 years should be in terms of Nigeria. What should be our priorities for the next 2 years?
I think the governor has 3 years, not two more years.
Okay.
So it's a 5-year term. So I think he's focused. Clearly, he knows what he's doing. And he has maintained central bank autonomy and independence, and he has restored confidence. Therefore, I don't see any reason to be concerned. The rating agencies love what they are saying. They've given a positive outlook. So there's nothing to worry about.
Priorities for the next 3 years?
Well, I agree they seem to have got a handle on things. I said earlier, naturally they need to keep their eye on currency, need to keep their eye on reserves, need to continue to keep their eye on inflation and try and improve the handshake or continue to work on their handshake with the fiscal side of things, because that's extremely key. And yes, you have local revenue from the fiscal side, but you also have crude oil sales and coal coming in, which can also help balance that FPI pressure. So if they can also find a way to support the, even if it's the oil industry, if they need to try and ramp up production, right, then you might start to see some more accretion to the reserves from the sales and co.
Because at the end of the day, it's investor confidence that we're trying to get here.
100%.
Get more FDIs coming into the country so that we don't have that reliance on hot money. Bismarck, your take on that. How much have we moved that needle for investor confidence?
I think if you look at the GDP numbers and the sectors and the activities that have expanded, you see most of those sectors are the ones that international investors have brought money in. Not relying on international debt, but from their own money, because they don't want to be caught in the foreign exchange losses, translation losses. So we've seen that in telecommunication, we've seen that even in the banking system, we've seen that in telcos. I think Airtel actually bought back some shares. And so I don't worry about that. I think more than anything else, the fiscal have been compelled, not because they have become altruistic, they've been compelled to do exactly what they have to do. When we are pushed to the wall, we do the right thing.
When we're pushed to the wall, we do the right thing. Investor confidence, as we wrap up the conversation?
It's moved tremendously. FPI numbers show you that. If you've seen the way, look at the FPI numbers, look at what it was prior to Cardoso coming in as central bank governor, and where we are today. Estimated figures, Mr. Raymond had mentioned about $10 to $13 billion. Prior to then, it was almost non-existent, very little trickles. That already tells you that there's huge investor confidence. And even local investors, like I said earlier, people are even beginning to invest in the Naira now. So you don't see that, I want to invest in dollars only. People have started looking at Naira investments, holding the Naira because they see as a better store of value. And then even the GDP growth also says to you that things are happening, because that's the highest GDP growth we've had in years, right? So that tells you things are moving up. Despite the high interest rate, we've still seen the economy growing. And so for me, it's been a huge move in the needle.
All right, the MPR reduced by 50 basis points today. Quite a lot of other adjustments made by the central bank governor. That's all on today's coverage of Nigeria's MPC meeting. A big thank you to my guest, Bismarck Rewane, the CEO of Financial Derivatives, and Nnamdi Wezu, the co-managing partner at Commercial Partners.